Meantime, let me welcome on board Chakri Lokpriya and figure out what he's making of the market right now. Chakri, hi, morning. Good to have you on the show as always. Chakri, while yesterday's decline definitely was led by those slew of discounts from Motown, but having said that, given that you've got the weekly expiry, you've got the budget coming up ahead, and then, of course, data points like US CPI as well on the global front, you think it kind of makes sense to go a little bit light into these events?
Good morning. Thanks for having me. You're right in terms of, the market has run up and going into budget, there's a lot of expectation in those few sectors like defense, railways, and infra, and agriculture also to an extent. While at the Nifty level, the earnings continues to be weak at the index level, simply because the main constituents, whether it's IT or pharma or metals, they are not really going to contribute to the earnings growth. On the other hand, the broader market earnings growth at the index level is likely to be far stronger. So, but those stocks have run up, so I think it's a caution would be helpful at this juncture.
Right, a little bit of caution is what you should maintain. But Chakri, on the point of the panic that those discounts from those auto majors actually set off in the market yesterday, do you think it was warranted, given that the run-up in the entire auto pack has also been very steep, led by M&M, Maruti and what have you? And if this decline continues, is that a buying point?
Clearly, it is a buying point if you look at M&M in itself. They have it's a sum of parts story. And, if it's various businesses, whether it's Mahindra Financial Services or TechM, all these companies will revive at, going forward. So that will contribute to the sum of parts valuation. Now, its core business in itself, they have a very strong lineup of, ICE vehicles, probably about 8 to 10 vehicles. Another very strong lineup in the EV segment, another 7 to 8 vehicles, if I recall the number right. And the farm segment, which has been lagging for the last 2 or 3 years for well-known reasons, is showing signs of recovery. So that will probably grow at, at GDP kind of a growth rate. Now, if you add up all this together and the stock is trading at less than 17, 18 times on a PE base, or maybe 20 times on a PE basis, but that's not the way to look at it because of the sum of the parts. And clearly, I think it presents a buying opportunity.
Wanted to get your thoughts in on Raymond. Has been quite the turnaround story.
Indeed, the whole story is now hinged on their lifestyle business and the valuation that the lifestyle business will get eventually. And that, again, is dependent on, how successful they are in their store rollouts and in rejigging their lifestyle businesses, all the new lines that they're planning to add. So I think expectation of all this, the stock has already done its fair bit of run-up. And, the other bit, the engineering business is a very old kind of businesses. There is no innovation there. The real estate business, well, is par for course. They have some amount of land monetization to do. So I think at this point, it's largely played out, would stay away.
I just want to look at the list of stocks from the railway basket. Let's look at the one-month changer, RVNL, IRCON, and the extraordinary run-up in some of these railway stock continues, right? 11 June, budget has come and gone, and the run-up, I think, is quite extraordinary. So, Chakri, what's next for railway stocks?
You're absolutely right, Nikunj. The stocks have had a phenomenal run-up in expectation of what they can do. Now, if you just look at what has happened, if you take any of the companies, you take Titagarh Wagons, you take RVNL. RVNL as a company, the avenues of growth that it has, not just in including building of new railway stations, metros, wagons, upgrading of facilities. All these things never existed in the past. You look at the company's own order book has gone from some 50,000 crores to 1 lakh crores. The railway budget itself has more than doubled from about 1.5 lakh crores to about 2.5 lakh crores, and will probably grow another 5-10% from current levels. So where does a company like this trade if you look at it 3 years out? Because these are all 1 lakh order will obviously be executed over the next several years. So to look at it from a 1 or 2 year forward multiple, it does not give the full picture. Therefore, if you look at it in a 3 year or 4 forward, then it trades only probably at about 20 odd times. So yes, they have run up phenomenally, but the long-term story is clearly intact.
Okay, that's that.
It's on any of the any other themes in exports, let's say textile or pharma, anything in the export space which looks good from the traditional sectors?
The traditional sector still, the export looks very weak. If you look at chemicals, it's still weak, and earnings upgrades are seem to be at least 2 quarters away. In the case of IT, well-known story, still the orders are not translating into revenues, and therefore IT is still that. Pharma is a very selective story, like Dr. Reddy. Yes, they made they made an acquisition, therefore it'll add some amount of growth. And textiles is a small space, very interesting space, but we haven't looked at it much.
I'm going to change gears and just talk about HPCL and BPCL. Chakri, why is this sector not getting re-rated? I mean, everything in the PSU space has just run away. And government has demonstrated that the political compulsions, at least in the fuel retailing prices, was yesterday's story. Now the spirit of, 80% spirit of oil deregulation is followed. Yet HPCL, BPCL are still commanding P multiples which are in single digit, almost single digit actually.
You're absolutely right. I think if you look at the other PSU sectors, whether it's defense, railways, all the contracts that have been coming in are competitive orders. Their margins are good, and there is no political pressure or external pressure for them to price those orders at an unprofitable level. Now that is the risk which HPCL and BPCL has always had in terms of its refined products. Still a very big chunk of what its revenue is. With again oil back at about $85, $90, the whole uncertainty of how the tax structure around oil prices, and I think that is unlikely to go away anytime soon for that sector.
You coming in on HPCL, BPCL, and a couple of these energy names, fairly active at that. Yesterday, of course, the paint stocks were on fire, Chakri. We saw Asian Paints jump up, Berger was higher, Indigo, Kansai. Look at any of the names. It's not the time of the year when you anticipate a move, just around monsoons, etc. What should one do with respect to the paint stocks? Is it a fresh buying opportunity in some of them?
Paint stocks at best are a trade. Because they've corrected very significantly in anticipation. Not anticipation. Today there is a lot of competition. Before, if you rewind back 2-3 years ago, there was only Asian Paints and Berger Paints, a couple of others. Today you look at Nippon, all the new guys who have come in, and they've significantly taking market share. They're taking not just market share, they're new volumes, they're hurting pricing. Lots of things are going on in the industry. So those multiples are unlikely to come back. So therefore, at best, it's a trading opportunity.
Kunal, we saw deep swell in FMCG.
Of course, on account of a lot of news flow, there were reports doing around that SBS got the approval to perhaps check out, the clarification coming in from the bank, and now the latest Moody reaffirming the ratings and the outlook raised to positive from stable. If you watch this one or any other mid-private sector bank?
Yes, there have been a lot of upgrades, and the book is clearly improving for Yes Bank, but it's still a long way away from the company becomes achieves stability, which I think is so it's a very risky story, for an investor to try and invest in Yes Bank from that perspective, because the number of risks in cleaning up its own books still exist. So I would clearly stay away. And in terms of banks, I think in general. All the private banks are trading at multiples, fairly decent multiples. They're not expensive by any stretch of imagination, but there's no exceptional earnings. There is no earnings upgrade that's going to happen in this quarter. So, I wouldn't really push for any private bank either.
There's a Jeffries report this morning, Chakri, that Jio could be a public entity, independent public entity very soon. Is there merit in thinking that Reliance in the next 2, 3, 4 years is going to be committed to create a lot of value by unlocking off their big businesses?
Nikunj, you're absolutely right. Because one of the things that have been holding back Reliance lately is it some kind of a holding company discount. People would give a sum of parts story to Reliance and value it higher. Now the market has moved to giving it a discount. So a geo listing, at about 120 odd billion dollars will give a major fillip to the other parts of the segments like its new energy business. Now, the retail is a very big chunk, it's probably about 50% of its overall valuation. Now, that and also, has been given a holding company discount. So I think, geo listing could act as a catalyst for the sum of parts valuation, which there is a lot of value because new energy is hardly being valued in the current sum of parts. So yes, the answer is clearly there is significant upside in Reliance.
That's a view coming in on Reliance, and perhaps it could be significant wealth creator over the coming course of next 2 to 3 years because that value unlocking is perhaps closer now. But pharma is one space which has been also seeing a lot of interest. Chakri, any new names that you've identified there? Today, of course, Glenmark Pharma and Life are going to be in focus on account of that OFS and the sale of stake happening. But any other name that you have recently picked out on?
Pharma is a space we continue to kind of, as a very stock-specific approach. So maybe Dr. Reddy's, after, they've announced the acquisition of the OTC space, looks like they're going to expand their presence in the OTC space. They have a nicotine company nicotine patch type of company they have acquired. Now, OTC revenues will be higher margin, and now from about 10% of revenue, that will become north of maybe 20-25% in about 3-4 years. So in expectation of that, there will be some amount of earnings upgrades as well, and the multiples are fairly reasonable. So yes, maybe Dr. Reddy.
Dr. Reddy, one of the top bets from Pharma. On that note, Chakri, we let you go. Appreciate you making time and speaking with us. Time now to head back to our technical experts to get the mid-cap ideas. Naresh, you go.
If you like this video, then like, share and subscribe to ET Now.